Introduction. Gambia International Airlines, in the bracket GIA, is a public enterprise established in January 1996 by the government of the Gambia under the 1995 Companies Ordinary Ordinance, which is Memorandum and Articles of Association, to engage in air transportation and other related activities at Banjul International Airport. In the year under review, GIA engaged in the following businesses: 1. Ground handling, cargo, travel agency. As an airline, flight operations is expected to be the core activity of the company. However, since its establishment, GIA has not exercised the full scope of its mandate in terms of flight operations. Following a huge financial loss in 2005, the company discontinued its flight operations activity, shifting its strategy from venturing solo to the pursuit of a strategic partner. There have been several attempts at partnerships, all of which have been rather short-lived, such as Air Namibia in 2001, Safia 2002, Futura 2003-5, TSCV, that's Cape Airline 2001-2003, and 2008-2010, and Air Mauritania 2014. Review of year 2020. In 2020, GIA had a total of 398 permanent staff, of whom 195, that is 50%, were in the operations department, detailing ground handling and cargo. Finance and administration constituted of 145 staff, percentage of 36, while technical services and commerce employed 45 people, in the brackets 11%, and 13 people, in the bracket 3%, staff respectively. It must be noted that almost 70% of staff in the operations and the finance and administration departments are support staff, namely baggage loaders, drivers, cleaners, messengers, and security personnel. Figure 1 below shows manpower distribution by department, staff distribution by department. We have operations, finance and administration, technical services, and commerce. You can see different percentages as I read before. From the pie chart, we go to the literature down. The patterns of employee numbers, revenues, and productivity in terms of turnover per employee have fluctuated over the years. Over the 12-year period of 1998 to 2010, productivity and the net income per employee has had a steady rise. Analyzing from the graph below, it can be seen that in the year 2011 to 2017, productivity has surpassed total employee, meaning that more output was being produced from the same amount of inputs. However, 2018 to 2020 showed a decline in productivity level. The current year under review had an employee productivity ratio of 3:1 due to the COVID-19 pandemic, as the number of staff outweighed the company's output and efficiency. You can see the graph below. Annual staff numbers and the productivity, 1998 to 2020. You can see different levels. I'm reading the literature below now. The year 2020 has witnessed unprecedented challenges that resulted in a below average performance compared to the previous year. The COVID-19 pandemic, which has the main contributing factor to this underperformance, had a significant negative effect on the company's revenue base, and such effect is projected to continue into 2021. In recognition of this spillover effect in the economy, the management of GIA adopted significant austerity measures to ensure GIA continues as a going concern entity and help ease the debt burden of the company. The aim of these measures is to improve the financial reliability of the entity and position it to be more resilient into the future. As part of its recovery strategy, GIA introduced measures such as A. a negotiation of debt restructuring by engaging its business partners for possible waivers on its loan. For example, the Zenith Bank dollar loan moratorium for 6 months. B, put a hold to awarding contracts to retired staff. C, put a hold on staff employment. Other measures were adopted prior to the year under review and continued throughout the current year as well. Such measures included: A, adjournment of all investments in flight operations as the business is risky and capital intensive, while searching for potential and reliable partners. B, training and continuous professional development of staff to improve productivity and efficiency in the workforce. Number 3, operating summary. The operating loss before tax for the year 2020 was 12.00 million. In the previous year, the company recorded an operating profit before tax of 50.149 million, signifying a 77.8% drop from 2019-2020. Adjusting the profit and loss account for interest receivable, payable, and corporation tax in 2020, the profit and loss after tax was 12.96 million, which is about 64.8% drop compared to the 2019 profit of 36.82 million. Figure 2 below compares net profit and loss over a 5-year period from 2016 to 2020. You can see net profit graph. You can see how it goes. 16.797 down to 35, then going up again. You can see how it meanders. Then departmental contribution to turnover in 2020: 4.1 ground handling. Ground handling activities, which includes ramp handling, passenger handling, and the coach services in 2020, generated a total revenue of 91.935 million, contributing 98% of the total turnover. However, compared to 2019 figure of 217.392 million, there is a 58% drop in its contribution to revenue. This drop in turnover can be associated with the COVID-19 pandemic, which resulted to cancellation of flights operating into BANJUL, thereby affecting ground handling activities. Figure 3, departmental contribution to turnover. You can see the pie chart again, how departmental contribution to turnover was developed. We have ground handling, we have Hajj, we have ticket sales, and we have cargo handlings. The colors are showing the differences. Now, 4.2, Hajj operations. In 2020, the Kingdom of Saudi Arabia, the Kingdom of Saudi, dramatically reduced the number of pilgrims allowed to attend Hajj to only Saudi citizens and the residents of the kingdom, in order to help prevent the spread of the coronavirus. As a result, GIA did not engage in any Hajj operations in the year under review. 4.3, ticket sales. In 2020, ticket sales generated 0.190 million, indicating a 63% decrease from its corresponding figure of 0.513 million in 2019. This decline in revenue percentage from ticket sales came as a result of COVID-19 pandemic, as there was an almost complete cancellation of air travel across the globe. 4.4, cargo operations. Okay. The total revenue generated by cargo in 2020 was 2.02 million, contributing 2% to the total turnover. However, the cargo revenue generated in 2020 signifies a 27% drop from the previous year, 2019, which was 2.764 million. Despite the COVID-19 pandemic challenges, lack of aircraft capacity to uplift more volumes still remains a challenge even after acquiring the regulated agency for third world countries, that's RA3 certification. The RA3 certification allows a cargo handling activity or entity located in a third world country to ship cargo to and through EU member countries. You can see the table. revenue turnover by department 2015-2020 amounts in 00 GMP. Air, ground handling, Hajj, and then we have cargo. 2015 we have 105, 240 million, and then we have for Hajj we have 277.277066, and the cargo we have 1,240,000. 240,000. So you can see this table as it is. Now let me read what.
Can I observe, Honorable Chairman? We have the report that is before us here. If you can take us through, because we expect you will have a summary on this where you will be presenting.
Yes.
But reading everything verbatim sometimes will consume time.
Yes, so
if you can take us through very important area. This document is going to do with us. We're going to open it again and critique it, any interaction we have with the constitution.
Thank you, Honorable Chair. That's what the chairman was consulting. When I said that the previous assembly, the last time, I was making summary and they stopped. They said I have to read everything. So thank you. It's a shift from norm, and then I think we are going with you to save more time.
Yes. Thank you.
Yes. Thank you, Honorable Chair. He's right. That's what I was just leaning back to see. Trying to read it verbatim will take us forever, and you won't remember. So he'll just do the headlines by page.
Can you be on page 10, please, where you have the departmental summary. This summary talks about departmental summary on page 10. Are you all on the same page?
Yes.
Right. 5. We have departmental summary. This summary is talking about how each department's contribution to the total turnover. Where we have the operations department, we have ground handling, and then we have cargo. We have passenger throughput in 2020 at BIA, Banjul International Airport, and we also have cargo operations. So you can see the table below. The table is telling us different departments' contribution to total turnover of the company revenue. That has stretched over to page 10 up to 13. We have flight operations. We have commerce departments. In summary form, it's just about as you say departmental contribution. How each department has contributed to the development of the company through different inputs. You can see them. You can see the graph below. Commission from travel agency. Because for travel agencies, ticket sales, we have to get commissions at least to sustain ourselves. On the Hajj operations, it's another activity of the airline where we can generate revenue for the upkeep of the company. Then you can go to page 16 where we have finance and the administration and the technical services. See, most of the staff under finance and administration are security personnel, cleaners and the manager and messengers. Other staff accounted for under this unit includes personnel in the office of the managing director. When you say finance and administration, it comprises the finance department and the human resource department, which is the core department of all other areas. You can see the table on page 16 still, where we have GI employee on company sponsorship in the year 2020. These are the staff that the company was able to sponsor to develop the manpower, to develop the human capacity for the upkeep of the company. These are the various students who have been sponsored to different programs or needed by the company. Then from there you have 5.3.1 capital investments. That's what we have invested in order to gain the returns on those investments. Then we have the way forward on page 17, starting with the ground handling, cargo handling. They have marketing and sales, which includes commercial activities, hajj operations, also under the commerce department. And then they have cost control savings. They have flight operations under earlier. I want to throw some light on cost control savings. Continue to develop in-house trainers for all the operational training needs, especially reference training in dangerous goods regulations. These are kind of trainings that can be tenable in the country here. Instead of sending people outside to do these trainings, which is capital intensive, we want to train people in-house to have the same standard and to reduce the cost. That will help us economically. Diversity into the related business on page 20. In addition to the already existing business units, the company emphasizes to engage in related services such as flight catering and the aviation academy in the medium to long term as stipulated in the 2022 to 2026 corporate strategy plan. Yes, this we want to do because for the airline, normally airline business needs to be, people need to be abreast with what's happening in the other parts of the world, what we call our benchmarking. Fine, we want to have our own aviation academy so that people can be trained. People can also come from other countries to come and train in the Gambia here, as Gambians are also going to somewhere else. So this is also going to be a center of excellence for the Gambia as well. It's in the plans. With that, I think that brings us to the end of this activity report.
Thank you, Honorable Chair. I will take you through on a tour of the 2020 financial statement. So on page 1, I'll just read the table of content for you. It gives the general information on page number 2, Director's report on page number 3, independent auditor's report on page 5, income statement on page 7, statement of financial position on page 8, statement of changes in equity on page 9, statement of cash flows on page 9, notes forming parts of the financial statements on page 11, and appendix on page 23. So after that, I will take you to page 8, the income statement. Income statement for the year ended 31st December 2020. So I will start reading the year under review and also the comparative year, which is 2019. So revenue for the year 2020 is 94,144,000, and 2019 335,122. Cost of sales is 6,544,000 for 2020. 2019 145,762,000. Gross profit 87,600,000 2020, and 2019 209,350,000. Administrative cost is negative 138,508,000 2020, and 2019 144,394,000. Depreciation charge negative 17,682,000 for 2020. 2019 negative 17,664,000.
Well, excuse me.
Yes.
Yes. 1 year report does include the currency there.
Okay, dollars.
Yeah. because you are now live. Everybody is looking at you.
Okay.
What we have, we know is a fallacy, but the people outside there don't know actually which currency are you talking about.
Okay.
$6 being pound for it is a fallacy.
Okay.
So we want you to mention those.
That's no, I'm assuming you are in the Gambia, so the reporting currency should be dollars. But thank you for that. Okay, the reporting currency is in dollars. So, grant released to income, $24,856 in 2020 and $24,856,000 in 2020 and 2019 $6,302,000 in $302,000 in 2019. Other operating income, $35,693,000 in 2020 and 2019 $111,000. Net operating expenses for 2020, negative $95,645,000 and 2019 negative $155,645,000. Operating profit or loss before interest and tax, negative $8,045,000 and 2019 $53,705,000. Interest received and similar income, $2,084,000 in 2020 and 2019 $2,353,000. Interest expense and similar charges, negative $6,059,000, and in 2019 negative $5,909,000. Operating profit or loss before tax for 2020 is negative $12,020,000, and in 2019 $50,149,000. Taxation is negative $942,000, and in 2019 negative $13,320,000. Operating profit or loss after tax for 2020 negative $12,962,000, and in 2019 $36,829,000. Turning to page 9, statement of financial position as of 31st December 2020, assets. So again, I'll read the current year and on the review and also the comparative year 2019. Non-current assets, property, plants, and equipment for 2020, $236,648,000. 2019, $250,100,000. Deferred asset, $4,017,000. So 2019 is zero. Total non-current assets for 2020, $240,665,000, and 2019, $250,100,000. Current assets inventories, $988,000 for 2020, and in 2019, $1,234,000. Trade and other receivables, $62,187,000 for 2020, and 2019, $86,817,000 in 2019. Cash at bank and in hand for 2020, $26,475,000, and 2019, $14,899,000. Total current assets for 2020, $89,650,000, and 2019, $102,950,000. Total assets 2020, $330,315,000, and 2019, $353,050,000. Equity and liabilities, capital and reserve, share capital for 2020, $16,766,000, and 2019, $16,766,000. Retained earnings, $4,467,000, and 2019, $17,428,000. Total, $21,233,000 in 2020, and 2019, $34,194,000. Non-current liabilities, borrowings, For 2020, $120,466,000, and 2019, $129,919,000. Grant income deferred for 2020, $65,632,000, and 2020, $69,434,000. A total $186,098,000 for 2020, and $199,353,000 in 2019. Current liabilities, trade and other payable. For 2020, $92,873,000, and 2019, $91,554,000. Taxation, $26,735,000 in 2020, and 2019, $26,294,000 in 2019. Bank overdraft, $3,376,000 in 2020, and in 2019, $1,665,000. Total $122,984,000 for 2020, and in 2019, $119,503,000. Total equity and liabilities for 2021, $330,315,000, and in 2019, $353,050,000. These financial statements were approved by the Board of Directors on 24th December 2021, and were signed on its behalf by the Chairperson, Managing Director, and Director. So on page 10, I read the statement of changes in equity for the year ended 31st December 2020. As at 1st January 2020, share capital is $16,766,000, and retained earnings is $17,315,000. The total is $34,081,000. Prior year adjustment $114,000, and the total is $114,000. Loss for the year is negative $12,962,000. Total negative $12,962,000. As at 31st December 2020, share capital is $16,766,000. The total for retained earnings for $4,467,000, and the total for the year is $21,233,000. I should have started reading the 2019 first, then go to 2020, but same thing. As of January 2019, the share capital is $16,766,000, and retained earnings is negative $90,511,000, and the total is negative $2,745,000. Prior year adjustment is $110,000, and total is $110,000. Profit for the year $36,829,000. The total $36,829,000. As at 31st December 2019, the share capital is $16,766,000, and retained earnings is $17,428,000, and the total is $34,084,000. So on page 11 is the statement of cash flows for the year ended 31st December 2020. Cash flow from operating activities, operating profit or loss for the year 2020 is negative $8,045,000, and for 2019, $53,705,000. Then we have transport expense amortized $922,000 nil for 2019. Exchange gain and loss $2,022,000 nil for 2019. Grant amortized negative $3,008,000 nil for 2019. Decrease in provision negative $8,369,000 and nil for 2019. Accounts payable written off negative $26,834,000 nil for 2019. Adjustments $264,000 and $82,000 for 2019. $82,000 for 2019. Bad debt written off $13,703,000 and nil for 2019. Loss on disposal, depreciation For 2020, 17,682,000, and 2019, $17,664,000. Loss on disposal for 2020 is $11,000, and for 2019, $111,000. Operating profit before working capital adjustment, before working capital changes. For 2020, negative $12,446,000, and 2019, $71,562,000. Increase or decrease in inventories, $246,000 for 2020, and negative $49,000 for 2019. Decrease or increase in receivables for 2020 is $32,999,000, and 2019 negative $18,929,000. Increase or decrease in payables for 2020 is $1,319,000, and in 2019 $8,797,000. Cash generated from operations 2020 $22,118,000, and in 2019 $61,381,000. Interest received for 2020 is $2,084,000, and in 2019 is $2,353,000. Interest paid negative $4,038,000 for 2020, and in 2019 negative $5,909,000. Corporation tax paid for 2020 is $500,000, negative $500,000, and in 2019 negative $627,000. Cash flow from operating activities $19,664,000, and in 2019 $57,198,000. Investing activities, acquisition of property, plant, and equipment for 2020 negative $3,471,000, and in 2019 negative $19,433,000. Cash flow from investing activities total negative $3,471,000, and for 2020 negative $19,433,000. Financing activities, decrease or increase in long-term borrowings, negative $7,993,000, and in 2019 negative $16,814,000. Increase in grants for 2020 is nil. For 2019 is $2,500,000. Cash flow from financing activities negative $7,993,000, and 2019 negative $14,314,000. Net increase or decrease in cash and cash equivalents is $8,200,000 in 2020, and in 2019 $22,282,000. Cash and cash equivalent as at 1st January 2020 is $14,899,000, and in 2019 $9,503,000. Bank overdraft as at year end nil for 2020, and in 2019 negative $16,886,000. Cash and cash equivalent as at 31st December 2020 $23,099,000, and in 2019 $14,889,000. Yes. So thank you very much.
They need to read first.
The original copy of the Republic of the American data, but not this time. We also want a soft copy of this report. As during our briefing, we did lay emphasis on this, that we want both soft copy and hard copy. So we want soft copies. And they'll be giving you an email where you can send the soft copies. Huh?
We will take the email address and we shall forward the soft copy.
Yes, let's forward to the auditor.
Thank you very much. And we would like to welcome you to the auditor's opinion. Before I just cover the opinion, instead of reading the whole report. Independent auditor's report. To the Board of Directors of Gambia International Airlines. Opinion. We have audited the financial statements of Gambia International Airlines set out on pages 7 to 26, which comprise
26 or 36? 24. I'm referring to the statement. We have audited the financial statement of Gambia International Airlines.
Set out on pages 7 to 26.
Exactly.
That's what I said. 7 to 26, which comprise the statement of financial position as at 31st December 2020, the statement of profit or loss, the statement of changes in equity, and the statement of cash flows for the year then ended, and the notes to the financial statements, including a summary of significant accounting policies. In our opinion, the financial statements present fairly, in all material respects, the financial position of Gambia International Airlines and its financial performance and its cash flows for the year then ended, in accordance with the generally accepted accounting principles and the requirements of the Companies Act 2013. Thank you very much.
Thank you so much. Have you moved to the management?
Yeah. Kindly move to the management letter. We have the.
Can I make a suggestion?
Yes.
When you move to management letter,
Yes.
rather than reading everything, can you take us to areas that are really complex?
We might just maybe.
The areas that have high risk.
The high risk, yes.
Yes, the high risk.
The high risk areas, yeah. Okay, that's fine. So the first item there is on the executive summary. It's on page 4, which summarizes the report and the importance of the colors there, the traffic light colors, the red and the yellow and the blue and the green. The first item with the high risk is on page 6. Page 6, 2.1. Impress reconciliation variance, high risk. Observation. During our review of the impress, we observed that the impress balance in the GL differed from the unretired impress balance maintained by the internal audit unit. The GL balance was $903,074, while the internal audit report showed an unretired impress balance of $61,000, resulting in a difference of $842,074. Implications. The significant variance in the reconciliation of the impress account balance in the general ledger and that of the internal audit indicates lack of regular reconciliation of the impress balance, which may lead to weakness in the internal controls. Recommendations. Management should ensure that at least once a month, the impress balance from finance is reconciled against the record kept by internal audit to avoid any significant variance arising.
Management response.
Can you skip the management response? Oh, this is very good.
Okay. The second point is also high risk. That's the next page, 2.2. Procurement Department's approval. High risk. Observation. We observe that the transactions listed below did not pass through the procurement system as required. This is a policy requirement for purchase of items to pass through the procurement department for quality control procedures. As you can see, the table listed some items, about 4 items there, with the amounts and the reference details that did not pass through the procurement department. Implications. Lack of contract committee's authorization for expenditures indicates weakness in the implementation of internal controls and may lead to financial losses for the company. Recommendations. Management should ensure that transactions of this nature do pass through the procurement unit as required. The next point is also classified as high risk. That's 2.3. Written contract requests. We reviewed the transactions listed below and requested for the contract documents for these, but these were not provided for our review. We also noted that GPP approval attachment forms were not provided for our review. We also noted that fixed assets that are not capitalized and depreciated due to policy rule threshold of 10,000 and above are not maintained and controlled separately. As you can see, also the table details the dates, the reference numbers, the details, and the amounts. Recommendation. Management should ensure that contract documents and GPPA forms are completed and maintained for future reference. Fixed assets that are not capitalized should be maintained in a separate register for control purposes. Then the next point is medium risk. We can skip that and go to the other point, that is 3.2. Motor vehicle acquisition, that's Mitsubishi Pajero, high risk. Observation. During our audit of the fixed assets additions, we observed that a motor vehicle, that's Mitsubishi Pajero GLX BJL 5570S, bought for the managing director at a cost of $3.4 million from TK Motors Limited, did not pass through the procurement department and GPPA system. The receipt and delivery notes from the supplier were not attached on the payment vouchers as well. We also noticed that the new vehicle was acquired in a part exchange transaction with the managing director's existing car registration number BJL 0573N. However, there was no independent valuation report to determine the fair value of the old vehicle. The value used in the exchange was based on the recorded net book value, which was $1.4 million. Implications. Lack of compliance with the GPPA guidelines is a violation of the Act, and lack of involvement of the procurement unit indicates weakness in the application of the company's internal controls. Recommendations. Management should ensure that all the acquisition of the assets that are relevant to the approval of GPPA and requires the involvement of the procurement unit do pass through the appropriate units to attain required compliance. Next point is medium risk. We can skip down and go to the next. The next high risk item is on page 16, 3.7.
Actually, we are not responding, as you said, but I think for some of the issues, I think it's better we talk something little about it for the committee to understand. On this purchase of, or this exchange of.
Thank you so much. I think, MD, today we are only doing the presentation, and during the consideration stage, this team will come about it, and you will be given the opportunity to adequately respond. Thank you.
Okay, we continue. Page 16, 3.7, bank reconciliation, also classified as high risk.
Page 15.
15 here.
Yes, 15 guys high risk. Retired impress.
Ah, I jump it.
Yes.
Oh yes, you are right. Point 3.6 on retired impress. Page 14.
15.
15. Okay, in your report. 15. Okay, on retired impress, high risk. Observation. We observe that the following impress transactions issued out were not yet retired. And we have the list there with the date, the type of impress, reference, the check numbers, the description, and the amount. So you have a lot of them there to the end. The total there is $835,185. Implication. The above impress transactions have exceeded the 7 days retirement timeline. This indicates that there are no effective impress control procedures in place to ensure that impress holders are held accountable after the due dates. There is also the risk that an impress balance diverted for personal use unnoticeable. Recommendations. Management should ensure that all the impress are retired within 7 days and that this policy is strictly adhered to. On the same page, we have the next high risk, that's 3.7, bank reconciliation. Observation. During the audit of cash and bank, we observed that no reconciliation statements were prepared for the below bank accounts as they are said to be dormant. We have the names there, the bank account numbers, about 3 of them. 3 of them. Implications. It will be difficult to detect and correct unauthorized transactions in these accounts if regular reconciliations are not prepared and reviewed on time, and this can lead to high-risk financial losses for the company. Recommendations. Management should ensure that regular bank reconciliation statements are prepared and reviewed to ensure that unauthorized transactions are detected and corrected on time, and the dormant accounts should be closed if they are no longer needed. Then the next high risk is 3.8, Hutch deposit account. Observation. During our review of the Hutch deposit account, we have compared the Hutch deposit account in the general ledger, that's GL, to the GIA Hutch current account balance from the EcoBank statement. We observe that the general ledger balance amounted to $29,091,683.54, whilst the current account statement of the Hutch held at EcoBank is showing a balance of $17,576,268.58 as of 31st December 2020. This resulted in a negative variance of $11,515,414.96. We also observed that management has been using the funds in the GI Hutch current bank account for some of their operational activities. Implications. The funds in the Hutch deposit account are owned by the depositors, and they can ask for their money at any time. This could be difficult. There could be difficulties in fulfilling customers' demands if the funds in the Hutch deposit account are utilized for the company. Recommendation. Management should ensure that all the funds in the Hutch current bank account are strictly monitored and avoid using it for other operational activities. Then the next high risk that we have is on page 3.13, that is page 23. Page 23. Reference 313. Long outstanding payable balances recognized as revenue. Observation. During our review of the revenue, we came across long-held payables amounting to $26,709,147.4 written down as sundry income. According to the information provided to us, it was the board that decided to write down this long outstanding payable balance. There was no evidence that these respective creditors are no longer in business or written documents as evidence that they will no longer pursue their balances. Below is the list of creditors and their amounts. We have the details there, the suppliers, names, and then the amounts involved. Implications. Recognizing accounts payable balances as revenue will overstate the revenue, which will further misstate the income statement and the balance sheet, because these are account payable balances which the company is liable to pay to the above suppliers. Recommendations. The stakeholders need to be consulted before taking a unilateral action to cancel out these payables. Management should also seek legal advice on the matter before arriving at a conclusion. Okay, that's the end of the current management letter, and we have the status of prior year management letter issues. In this one, we have the prior year management letter points that are monitored, and we check whether they have been implemented or whether they are partially implemented or whether they are fully implemented. But we can realize that most of them have been implemented. There are only one or two that are partially implemented, but all of them have been implemented. Thank you very much for your attention.
Can you check also those two that are partially implemented? Is there any that is not implemented?
No. There are two partially implemented. That's reference 4.6. That's page 27. 27, yeah. That is partially implemented. That's relating to cash and bank. No breakdown list for impressed balances. So we have the observation there, and we have the management response and the implement. During our review over the cash and bank balances, we requested for the breakdown and documents relating to the impressed balance of $1.9 million. But these were not provided for our review. The recommendation there was management should ensure that all the entities, transactions, and supporting documents are properly filed in a sequential order for ease of retrieval when needed. So we realized that during the review of the subsequent year, there was improvement in the details that we needed for the impress. That's why we say partially implemented. The order partially implemented is on page, is it?
27.
Page 29.
27.
4.9. No, 4.8. 4.8 also is partially implemented. 4.7. That one is not implemented. That is not implemented. Then 4.8 is on the payroll, late payment to Social Security.
I did demand for you to take us through those that are partially implemented. So like from 4.7 payables is like it's not implemented.
Yes.
Let's go through that.
That is relating to the payables.
Yes.
Our review of the payables listed below revealed that there have not been any movement in the account for the year 2019. So you can see the total there. And our recommendation was management should ensure that creditors are paid on time in order to avoid potential litigation against the airline. So you'll find out that the subsequent year, there was no payment also on this payable. That's why it is not implemented. So the next point there, 4.8, is partially implemented. That's late payment to Social Security. The observation there was, during our review of the salary account, we observed that the client has not been paying staff pension contribution and injury compensation to Social Security and Housing Finance Corporation on time, as shown in the following table. You can see the table there. So in the late payment, the recommendation, management should ensure that statutory deductions made from employees' pay are remitted to the appropriate authorities on time to avoid any possible penalties and interest charges. So this is partially implemented, as there was some improvement, but the problem still exists. The problem still exists. That's why we said partially implemented. Then the other partially implemented is the last point there, 4.9. That's payroll. It's similar to the previous one. Late payment to GRA. Again, our observation was, during our review of the salary account, we observed that the client has not been paying staff income tax as payee to the Gambia revenue authorities on time, as shown on the table below. Then we realized the recommendation, management should ensure that statutory deductions made from employees' pay are remitted to the appropriate authorities on time. So this problem still exists, but there are some improvements. That's why we say partially implemented. That's the end of the report. Thank you very much.
Thank you, Chairman. With the senior management, we really thank you for you showing up to come and do this presentation before the committee, which we really appreciate. And we had all the presentations. We will go and look at these things. And you are now scheduled for 25th of July for consideration. We'll do the consideration and possible approval, or we throw it out. That depends on our interactions with you. So let us be prepared for 25th of July. That falls on a Monday for consideration and possible approval. Chairman, do you have anything to say?
Yes, thank you, Honorable Chair. I just wanted to say thank you very much for allowing us to present the accounts, and take note that you will take your time to review it, and then come back for your own interpretation of the accounts. I am just wanting to ask whether in terms